Good afternoon, everybody, and welcome to this edition of our weekly Broker Moves review for Friday, March 5. My name is Carl Capilingua. I'm the market analyst over here at Think Markets, and it is a pleasure to be with you as we delve into everything broker-related for the Australian market over the last week or so. We'll do that after we talk about the Think Markets difference, which is substantial $8 flat rate trades, your own holder identification number, unlimited phone support, and of course, no hidden platform or subscription fees. Four fantastic reasons to make sure your next ASX share trade is with us. The agenda for today is to check out all of the ratings, upgrades and downgrades, price target increases and decreases from the big brokers for the Aussie market over the last week, and then we'll have a look at a few stocks of interest. Let's kick off with the upgrades first, and don't forget each broker has a rating for each company they cover, basically telling their clients what they should be doing: buy, hold, sell, for example. They'll also have a price target, which is based upon their company valuation and typically explains to clients where they think the price could go over the next 12 to 18 months. So with that in mind, let's have a look at ARB Corporation, the four-wheel drive accessories manufacturer and retailer. JP Morgan upgrading their rating from hold to accumulate and also increasing their price target from 35 to 36.50. Now that's a 4.3% increase in their price target, and when you compare the current price target of 36.50 to the current share price, they are seeing about 10% further upside. ARB, of course, during the week announcing the acquisition of Truckman Group, which is a UK business doing pretty similar things to what they're doing right now for about £22 million. JP Morgan did like that acquisition, but more broadly speaking said that the overall business remains well placed to take advantage of structural trends towards maintaining our existing vehicles and moving away from public transport. Next company we're going to look at today is Austal, ticker code ASB. They went from neutral to outperform at Credit Suisse. Credit Suisse increased the price target slightly from 270 to 275, but still seeing a nice bit of upside there, about 13.6%. The company reported their first half net profit of 52 million. That was 22% ahead of the consensus, which was about 43 million. And we'll talk a little bit more about that one later on because it is one of our stocks of interest today. Also on the stocks of interest list is Evolution. So Citigroup came out during the week and they downgraded their estimates for the rest of 2021, and that therefore has some impacts on some of the gold stocks. Most of those gold stocks seeing price target decreases, not Evolution though, actually getting an upgrade from neutral to buy and their price target being held steady at 480. Citigroup saying they are one of the few companies in the sector that have solid existing cash flows that should get them through this downturn in the gold price. Orocobre, also one of our stocks of interest, funnily enough, and is Orica. Now, for Orocobre, they were upgraded from underperform to neutral at Credit Suisse, no change to their price target at $5. And on Orica, they went from neutral to outperform with a small price target decrease, but still plenty of upside seen on that one at Credit Suisse. Looking at the downgrades, not so lucky, Damstra Holdings from overweight to equal weight with quite a large price target decrease there, wasn't it, from Morgan Stanley, about 37%, but about that much seen in terms of the upside. Macquarie on Orica from outperform to neutral and a big price target decrease, and UBS buy to neutral with another big price target decrease there. Both of those brokers seeing about 10% upside left in the stock. So when we compare these two ratings downgrades from Orica to the one there at Credit Suisse, brokers a little bit mixed on the company, and the news out during the week was that the company announced that they would be swapping out their CEOs. The current CEO is stepping down. They have appointed a successor from within the business, and they also downgraded their profit expectations, I think by about 128 million or so, on the back of lower sales to the thermal coal market. Of course, thermal coal market being caught in that spat between Australia and China at the moment. We'll talk more about Orica as we get to those stocks of interest. Having a look at the price target increases for the week, AMP got a couple. They had some, you could call it good news. They entered into a joint venture with Aris Management, where Aris would take on a 60% stake in their private markets business, which manages a bunch of private listed infrastructure and real estate assets. Citigroup said it was probably worth about 15 cents a share. JP Morgan said it was probably worth over 30 cents a share, and therefore we saw some price target increases from each of those brokers, 10% at Citigroup, about 16% at Morgan Stanley, and both brokers seeing quite a bit of upside there, but interestingly both still maintaining their neutral rating. Afterpay in the news, brokers still responding little bit of a delayed response to their half-yearly results out the prior week. Citigroup going up 8.5% on their target, with about 11% seen still to the upside. UBS, now these guys are notoriously bearish on Afterpay. That $30 target has been there for a very long time. And for them to go up 20% actually is impressive to $36, but you can see they are way, way off where the company share price is right now, and they are the most bearish broker there with a sell rating as well. We talked about ARB, their acquisition in play, and Citigroup and JP Morgan with some small price target increases, but plenty of upside seen in that one. Austal Shipbuilders, they announced that their half-yearly results, which were better than expected, but the company came out with a guidance downgrade as well. So brokers were a bit mixed. Some of them focused on the better than expected result, and then some of them focused on the worse than expected guidance. Now, focusing on the better than expected result was Credit Suisse and JP Morgan. Small price target increases only, though, it should be noted. And whilst a little bit of upside seen at Credit Suisse, not a lot seen at JP Morgan at all. Looking down the list, maybe an interesting one here, Galaxy Resources. They came out with their half-year results as well. They said that revenues were down 20%, just checking my notes, but profits were up 89%. They said that they intend to ramp up production at Mount Cattlin to full production rates by the end of second quarter 2021. The return to normal operating conditions has allowed them to increase their guidance range for spodumene to 162 to 175,000 kilotons. UBS, they were taking a positive view on lithium prices, and therefore they found an 8% increase in the target price for Galaxy, and Morgan Stanley also looking to a bit of a recovery in those lithium prices as well, but a very big difference between where they think the company's going from here in those price targets, clearly. Having a look into the next page, Nickel Mines, it's a stock I do follow closely. It's having a tough time at the moment, but good to see Macquarie keeping the faith there with a 6.7% increase, an outperform, and still 33% seen to the upside. Orocobre will be one of our stocks of interest. Now, they provided the market with their first year results as well. They said revenues were down 26%, losses widened to nearly 30 million from about 20 million as lower lithium carbonate prices dogged the business. Cost reductions were not enough to offset lower prices, but the company remained optimistic, saying that conditions in lithium markets were improving. Brokers quite optimistic as well. We saw JP Morgan increasing their price target a touch, a nice bump up there at Macquarie by 45%, but still not enough to see any upside from here. Small increases at Morgan Stanley, modest at UBS. In fact, UBS initially decreased their price target from $650 to $620 early in the week, and then popped it back up to $670, and they've got a buy rating on that with plenty of upside seen in it from here. Looking down the list, really heading to the last page, Zipcode, we've still got brokers responding to their half-yearly results. Brokers a little bit mixed on the result, noting some fantastic growth coming through. Both Citigroup and Macquarie said that, but both worried about the cost of acquisition. Both brokers noting significant competition. I think Macquarie also noting that the company didn't have the scale, international scale, that maybe some of its competitors have as well. But we did see price target increases there. A big pop-up at Citigroup was still about 10% seen, and Macquarie, whilst we got an increase there of 6.5%, they're a bit bearish on the stock overall, with 44% downside seen from their price target to the current price, and then still maintaining that underperform as well. Coal miner Coronado Resources got 2 in a row, and fairly decent ones there, but still plenty of upside seen, outperformed by, probably not getting too concerned by that. JB Hi-Fi Kogan, the retailers there, but still upside seen from Macquarie, Credit Suisse and UBS. Into the final page, Orica. We talked about that mixed response from the brokers, and whilst we did see Credit Suisse with that ratings upgrade, 2 downgrades and unanimous price target decreases of varying magnitudes, but getting quite severe. Looking down the list into Macquarie and UBS, generally upside still seen in the target, and the ratings are, well, only one outperformed there, isn't it? We know Credit Suisse are the most bullish on that one. Regis Resources, the gold miner, they had their half-yearly results again, gold prices and the fall in gold prices weighing on sentiment there. So we did see some small price target decreases, but operationally the company is doing well, and that's why we're still seeing lots of upside in the share price. And brokers very confident with a buy overweight and a buy from JP Morgan, Morgan Stanley and Citigroup respectively. Okay, stocks of interest today. We talked about Austal shipbuilders before and their result coming better than the market expected, but as mentioned before, guidance was disappointing. Citigroup lowered their price target quite a lot, actually, $4.30 to $3.30. Did retain their buy rating. They said that the business is trading at a major discount to its peers, so that is a positive. They still have multiple growth opportunities in the US and Asia, but the broker was disappointed with that guidance and also the impact of the rising Australian dollar. Credit Suisse upgraded their rating from neutral to outperform. They raised their price target very slightly. They had a positive reaction, obviously, to the results. Said it was ahead of expectations. They did like the margin progress in the US. They weren't concerned by lower revenue guidance going forward, so the most optimistic broker there, because with EBITDA guidance intact, it just indicates that management really doing a better job during a slowing in activity due to the pandemic. JP Morgan raised their price target from $2.30 to $2.35, kept that hold. They said the results were a beat, but remained cautious on the outlook. The stock doesn't look expensive here, but the risks are too high to change their rating at this point in time. Very interesting. And Macquarie, another big drop in the price target there, but did maintain the outperform rating. They said that the growth pipeline is still strong, but they are disappointed by that forward guidance and negative FX impact similar to Citigroup. Looking at the company's share price, we like to see green on the screen when it comes to the short-term and long-term trends, and we are not seeing that. We're seeing a downtrend here in the short-term trend. We're seeing a downtrend in the long-term trend, and for that reason, basically, I couldn't look to buy it at this stage. This was the results announcement here, and if there is one positive, it's that since that announcement was initially digested, that lower guidance that was provided, the share price has been trending slightly higher. Yes, it's come back in the last few days, but so has the market. So we'll see how we go. But it is a long way from a buy. But hey, that's just me. If you look at the brokers, they're calling it a buy. We've got 2 strong buys, 4 buys, 1 hold, no sells, no strong sells. Looking at the fundamentals, that is a stellar enterprise value to revenue number, probably one of the best in the market, I would suggest. The PE ratio is not high, so the company doesn't look expensive here, but the problem is that it's not exactly going down, is it? Because the growth isn't there. So we typically want to see this value here, PEG, less than 1, and at 20, it's way too high. The dividend yield, not bad, and return on equity is pretty good too. But I guess without that growth, it's once again not getting me too excited. But the brokers seem fairly positive towards it. Moving on to the next one, we've got Orica. They did have that profit downgrade, $125 million, most of it to do with thermal coal markets. And if coal miners are slowing down, it means Orica is slowing down as well. Looking through some of the broker comments, and we'll just cherry pick here. Broker is annoyed that the company was too bullish in their previous update and therefore disappointed in this one. That was JP Morgan. UBS, not impressed with that first half trading update, but the growth outlook is positive. Risks are high. That was a pretty common theme about risks going forward. However, Credit Suisse, worse might be behind the company. Update clears decks for impending recovery. Value-based opportunity based upon share price weakness, so they're pretty optimistic in contrast to the others. Macquarie, they were downgrading. They said that they're concerned about the company's inability to execute their strategy. That's a pretty big whack to management there. Costs are still a problem. Lower mining volumes due to the pandemic, a problem, and CEO transition, all headwinds. Morgan Stanley, they said that this is an interesting one. The issues facing the company are both temporary due to the pandemic, but also structural, so that's not good. And whilst the industry position is strong, the slow recovery in key markets will impede the quick turnaround in the business. And that sort of mediocre view from Morgan Stanley is reflected in the mediocre view overall from brokers. They are a hold. 1 strong buy, 2 buys, lots of holds in there, and some sells. Shows you how confused brokers are about this one. And if the brokers are confused, it's hard for us to really get excited about it. And certainly when you look at the trends again, we've got the short-term and the long-term trends all heading down. Price action is horrific. We've broken through key support levels there. There's not a lot to get excited about. Once again, that's the news announcement. It hasn't really rallied a lot from there compared to Austal. That's something that's very interesting, isn't it? So maybe there's still some downside from here. Enterprise value to revenue, not bad, not great. PE is way too high for my liking, especially when the PEG is still high as well. Dividend yield's not fantastic, and the return on equity is pretty mediocre. Means, look, just from me, it's a no here, it's a no here, and it's a major no here. I'll give it 3 crosses there, so make of that what you will. And next up, lithium producer Orocobre. As mentioned before, a pretty terrible set of half-yearly results for them, mainly on the back of lower lithium prices. Company was optimistic about improving conditions going forward, and most of the brokers echoed that as well. UBS in particular said lithium pricing upside could be as much as 10 to 50%. Lower costs will also help the bottom line. Credit Suisse were also quite positive, upgrading their rating from underperformed to neutral. They weren't impressed with the size of the loss. As I said earlier, about 10 million more than expected, well, about 10 million more than Credit Suisse expected as well. But they were looking forward to improving operating conditions and improving exposure to electric vehicle markets. JP Morgan, they increased their price target from 530 to 540, retained their hold. The loss was worse than expected, and they were a bit bearish on some of the company's assumptions around Olaroz. Macquarie retained their underperform rating. That loss was once again bigger than expected. And contrasting some of the comments from the other brokers, they said that even if prices do increase, it might not help Orocobre out because much of that production is already contracted at current lower prices. So the recovery in Oracobre's earnings is potentially a long way down the track. Morgan Stanley did increase the price target very slightly. They were impressed with the company's progress on costs, but profit was, again, disappointing. Looking at the chart, well, the chart's actually not too bad. However, with this new short-term downtrend, I don't think there's any reason to get too excited. In the near future, we do want to see how it reacts at this long-term dynamic support zone, and if it can put in a very quick rally and then make a higher trough from here, say to here, then you would be looking to get involved on the basis of it maintaining that long-term trend. Until then, we don't need to do anything, and the brokers are pretty much echoing that thought with an average of a hold. Most of them are in the middle and, pretty balanced there on the buys and the sells. Looking at the fundamentals, there are a bunch of negatives in here because we're making losses, which makes it very hard to compare to the others, but just on the enterprise value to revenue number, that's pretty terrible. So we're looking at this from me. Over to the gold sector, Citigroup came out, they downgraded their price estimates for gold by about 5% to $1,800 an ounce for 2021. Now they're behind the market at the moment, which is closer to $1,700 and dropping. That saw them downgrade the price of most of the gold companies there, so Northern Star, Perseus, Regis, Resolute and St Barbara by varying amounts. I'll let you press pause and check up on those. With respect to Evolution, however, that actually got an upgrade from neutral to buy, so that is clearly their pick in the sector. They said that the company is one of the best places to generate strong cash flows through this spot price downturn. We've got numbers for Evolution under here. I know I'm on top of where it says so, but trust me on that one. Brokers are actually pretty positive to this one. 3 strong buys, 5 buys, 7 holds, only the 1 sell. Have a look at some of the numbers here. Enterprise value to revenue, look, not fantastic. The PE is not terrible, not fantastic. Growth is not fantastic either. Return on equity is good though. Dividend yield, pretty reasonable. Yeah, look, it's probably a C plus or a B minus report card there on the fundamentals, but not enough for me to get excited about. So I'm a no here. Whilst that's pretty good, the short-term downtrend and the long-term downtrend has to keep me away from buying this one. Having said that, that is the gold sector, not the Evolution chart, but the Evolution chart is very, very similar. I can't remember what the technical level is for Evolution out here, back here, but I don't think you need to look at it. Just look up the chart and check what that is. I don't think you need to look at it until we get there. And once again, you want to see it come down and make this sort of a pattern before we would look at it. But hey, we're looking a long way into the future. We often look into the future and talk about the current as well. We do that in our market news section of the website, so get out there and read some of those articles. You can follow me or the Think Markets handles on Twitter if you like. We do have some upcoming events, and you need to go to the webinars page to register for each of those, and I encourage you to do so. The disclaimer before I leave you says that everything we've discussed today is general in nature. You should read this disclaimer carefully because we do have some products that could see you lose more than your deposit. So give us a call if you have any questions. Other than that, it's been a pleasure chatting with you today. Hopefully you got lots out of it. All the best for your trading until we catch up again. Bye-bye for now.